The tenant shared ownership scheme allows tenants of Barking and Dagenham Council to buy a share of their home. It's an exciting alternative to the traditional right to buy scheme which many people are struggling to afford. It means that you can buy part of your home and rent the remainder, giving you long-term security and a foot on the housing ladder. The UK has become a nation of homeowners, but our borough has the lowest level of owner occupation in London. So we want to help our residents achieve their housing aspirations, and we don't want council tenants to be forced out because they can't afford to stay. Our scheme provides affordable home ownership for people on low incomes, helping them to stay in their family homes and create a stronger community. To be eligible for the scheme, you must be a secure tenant of the council, have been a secure tenant for at least 3 years, and demonstrate you can afford it. You cannot join the scheme if you live in a property owned by Reside. Tenant shared ownership has many advantages. It's an affordable way to get on the property ladder. You can use your right to buy discount to keep the cost down. Your combined mortgage and rent can work out much cheaper than buying outright. You can buy a bigger share if you want to, when you can afford to. And you can pass your home on to your children or anyone else that you choose. However, you should also be aware of these restrictions. You can only buy a maximum of 70% of your home. You'll become a leaseholder with a 125-year long lease. You'll no longer have the right to buy. If you do want to sell your home, you must offer to sell it to us first. You cannot rent out your property. And it will be your responsibility for all the repairs. Inside and outside for houses. For flats, you must do the internal repairs, and we will maintain the building and communal areas. However, you'll be charged a percentage of these costs. A great advantage to this scheme is the fact you'll benefit from a discount. How much of a discount you get depends on whether you live in a house or a flat, or how long you've lived there. That's set by central government. The cost will depend on the market value of your property, the size of the share you buy, and the discount you're entitled to. For example, let's say your home is worth £270,000 and you're entitled to the minimum right to buy discount of 35%. If you want to buy a 25% stake, your discount means you'll need a mortgage of just under £44,000. With a 25-year mortgage at 5%, you would pay £257 a month. If your current rent is £440 a month, it would go down to £330. So that's a grand total of £587 to pay each month. For that, you have a great investment and long-term security for you and future generations of your family. Remember, you'll need to pay buildings insurance or service charges too, and you'll need a deposit. There'll be mortgage arrangement fees and solicitors' fees, and you may have to pay stamp duty. It's really important to remember that interest rates can go up as well as down, and that your home is at risk if you do not pay your mortgage and your rent. If you want to buy a bigger share of your home, you can do so through a process called staircasing. You can staircase at any time after the first 12 months. You can buy a minimum of 10% more each time until you reach a maximum limit of 70%. There'll be some fees to be paid each time you buy more, but you'll be able to get a further percentage of your right to buy discount as you staircase, until you've reached your full discount. As you increase your share, your monthly mortgage payments will go up, but your rent will come down. Tenant shared ownership is flexible and affordable, and can make an excellent investment. Make sure you read the full guide to our shared ownership scheme before you proceed, and get independent advice if you're not sure. See our website for details or contact the Home Ownership team for applications or more information.